It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to the Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, again, smartest guy in the room, Michael Becker.
Hey, Paul.
Michael, who has over, 4,600 doors, Michael? $85 million in investor equity money.
Yeah, it's a lot of money.
You are the man. So congratulations on your success.
Thanks.
So in today's Ask Mike Monday, we get this question asked many times. The question is really, Paul or Michael, can I get pre-approved for an apartment transaction just like I would get pre-approved for a home loan? So that's my question to you, Michael. Does commercial lending have a pre-approval piece to it?
Sort of. So what that means, when you go buy a personal residence, kind of a normal single-family mortgage transaction, that the mortgage broker will give you a pre-approval letter, a pre-qualification letter that you take when you submit an offer. So on the commercial side, it's a little bit different. So what we really do, because every property is a little different, so that's why it's kind of the sort of answer. But what we do for kind of first timers, or really anyone that's new to us per se, is what we do is we kind of start in reverse a little bit. We kind of take the principals, the sponsors of the deal, and then anyone on their team that would sign on the loan, either as a guarantor or a key principal. And then what we do is we request that we get a personal financial statement. So kind of your personal balance sheet that kind of shows how much liquidity you have, the cash, marketable securities, bonds, things like that, as well as kind of your other assets that show you total net worth. And then we kind of reverse engineer it. And you have this much net worth and this much liquidity, kind of either individually or collectively if there's multiple sponsors in the deal or key principals in the deal. And then, that kind of qualifies for up to this much amount of loan. And then we divide that by the loan to value. And then we kind of give you, hey, you can go out and target up to X amount of dollars in total cost. And that's kind of what we do. And then when you actually go, start bidding on properties, at that point, you'll get a specific property that you're looking at, and then we will then go qualify the property. But we've kind of already done the pre-qualification that your group is good enough from a sponsor standpoint to get up to that kind of total cost number, and we then work on the actual loan on the actual property at that point.
And that's absolutely correct. Is that 2/3 of the transaction to be approved is really based specifically on the history of the property itself, and 1/3 is based on you. So if we've already checked the 1/3 of your net worth, your liquidity, your history of owning multifamily property, and if you don't have it, maybe one of your co-sponsors who has the multifamily box checked, that will definitely help. But 2/3, just like Michael said, we're looking historically. So we're looking through the rear view mirror to see how the property is done in the past. And then we're also kind of figuring out, with the help of your property management company, how you are going to operate the property in the future. So what are you going to do? Are you going to cure some of the deferred maintenance in the property? How are you going to raise rents? What's your budget for rehab on the property? We kind of want to figure out what you're looking at going forward so we can kind of make a good decision. So things that would help us kind of put that deal together is there's things that we want to see. Just like Michael said, we want to see your updated signed personal financial statement. We want to see some liquidity verification, show us some bank brokerage statements. Maybe if we would want to see it, maybe your 2 years of corporate or personal tax returns. And then probably the biggest thing is a couple things is your real estate resume. What have you done? I mean, even if you have some single family history, if you bought a rental property and you bought it for, say, $200,000 and you put $25,000 worth of rehab, and then you sold it for $300,000 or $400,000, that's a good story to tell. We love good real estate stories of success. The other thing we want to see is your schedule of real estate and what you've owned in the past or what you own currently right now. And we want to have that completely filled out, whether that was recourse or non-recourse and what the annual NOI is or the debt service. We want to see how big you got at one period of time. And then Mike's going to ask you, like myself, we're going to ask for like an offering memorandum. Like if you do find a specific property, you want to take a look at what the marketing piece of the deal is. You want to take a look at the historical monthly operating statements, how the property's done, and a current rent roll. And if you have some pictures of the property, just to get some interior, exterior, maybe 3 or 4 of the interior, 3 or 4 of the exterior, just to give us a visualization in our head what kind of condition this asset's in. So, that's kind of how we typically do it. We kind of reverse engineer it. If you don't have a property in your mind at the beginning, and then we kind of bring it over to fine print when you do have a property, making sure that you do qualify, that you have no money at risk.
When you start out though, Paul, just to kind of clarify, when they're just kind of looking in the very initial conversation with one of the guys at Old Capital to kind of just basically do the basic sizing on how much they qualify for. Just basically a PFS is really what you need as long as it's kind of filled out. Then once we get a little deeper in, that's when the rest of that checklist Paul just went off will kind of come in play, correct?
Yeah, that's exactly correct. We just need some initial information on you, and if you have a resume, that helps. All that additional information is when you actually have found a property. We'd also like, if you could, is do your initial underwriting of the deal of how you see it. Because, it won't take us very long to underwrite the deal, but we want to kind of see through your eyes how you are visually seeing how this property works, and make sure that you understand how mathematically, that if it's making money or losing money, we just want to get your perspective. So, Michael, anything else that we need to talk about concerning pre-qualification or pre-approval type of stuff?
I think that's pretty good. We always reference this before, but now might be a good time too. If you guys go to oldcapitalpodcast.com, there's a sample due diligence checklist there, as well as kind of the multifamily finance 101 white paper. So really, within that white paper is about 15 pages. We kind of go through a lot of this information Paul and I just talked through the last 5-6 minutes here, and kind of detail out a little bit more in a written form that you guys can go back and reference. So that's a good document. I know we talk about it all the time, but it really is kind of the 101 of multifamily finance and how these deals get put together.
That's exactly it. All right, let's close it out right here. Michael, thanks for your time. We appreciate it. Again, I'm Paul Peebles. Michael Becker, have a good day.